Welcome to The Explainer. Today, we're cracking open a book that is, and I'm not exaggerating here, one of the most important guides to building wealth ever written. Benjamin Graham's The Intelligent Investor.
But let's kick things off with a question that might sound, well, a little crazy. Can a true, certified genius, one of the smartest people who ever lived, actually go broke investing?
You better believe it. That's a quote from Sir Isaac Newton. Yeah, the Sir Isaac Newton, the guy who figured out gravity. He got caught up in a massive stock bubble, made some money, and smartly got out. But then, he saw his friends getting rich, got a serious case of FOMO, and jumped back in right at the very top.
And that single emotional decision cost him a fortune. We're talking over $3 million in today's money. It's the perfect example of a huge lesson. Having a sky-high IQ is absolutely no defense against the madness of the market or, the madness in our own heads.
So what was Newton's real blunder? Well, it's the exact same mistake that countless people are still making today. He fell into the market's most dangerous trap, confusing investing with speculating.
See, it all comes down to your mindset. An investor, they act like they're buying a piece of a real business. They do their homework. A speculator, on the other hand, is basically just betting on which way the price will wiggle. They're surfing the market's mood and following the crowd. And Benjamin Graham, he drew a crystal clear line in the sand with this definition. If what you're doing doesn't, after serious analysis, promise to keep your original money safe and give you a decent return, well, you're not investing. You're speculating. End of story.
And let me tell you, unintelligent speculation is like walking through a minefield. Graham lays out these huge red flags, buying into the latest hot stock, betting money you can't afford to lose, and the biggest trap of all, speculating while telling yourself you're actually investing.
So if that confusion is the disease, then who wrote the prescription for the cure? Well, that would be the master himself, Benjamin Graham.
Now, Graham's wisdom didn't come from some ivory tower. Oh no, this was forged in the fire of serious financial pain. His family was wiped out in a crash. He personally lost almost everything. We're talking nearly 70% in the Great Depression. But he learned, he survived, and he went on to build one of the greatest long-term track records in the history of Wall Street.
And he took all of those tough, hard-won lessons and poured them into this one book, creating the Bible of what he called value investing. And it would go on to get pretty much the best endorsement you could possibly imagine.
Yep, that's from Warren Buffett, Graham's most famous student. He read it when he was just a kid and says it's still the best investing book ever written. When the most successful investor in the world says that, you really ought to pay attention. Okay, so what is this revolutionary mindset all about? What's the secret sauce? Well, Graham's entire philosophy really rests on 5 core principles.
These 5 ideas are everything. First, a stock is not just a little blip on a screen. It's you owning a tiny piece of a real business. Think like an owner. Second, picture the market as a moody pendulum, always swinging from crazy optimism to total despair. Your job is to take advantage of that, not get swept up in it. Third, and this is simple but crucial, the price you pay determines your return. A great company can be a terrible investment if you pay too much. Fourth, always demand a margin of safety. That just means buying something for way less than it's actually worth. It's your buffer against bad luck and being wrong. And finally, the 5th and most important pillar, your own behavior matters more than anything else.
And that last point, the one about your own behavior, is so incredibly important that it leads us to the single most profound lesson in the entire book. This is the final diagnosis for what really makes or breaks you as an investor.
Think about that. The stock market, the economy, that hot tip your buddy gave you. None of that is your biggest threat. The person who's most likely to wreck your portfolio is you. It's our own impatience, our greed, our fear. That's the real enemy.
And this brings us right back to Newton. It's why a genius can fail. See, successful investing isn't really about brain power. It's about character. It's about having the emotional discipline and the patience to stick to your plan when everyone else is either panicking or popping champagne.
So in the end, Graham leaves us with this powerful question. It forces you to stop looking for scapegoats and start looking in the mirror. Because ultimately, the one thing you can actually control is yourself. And that, more than anything else, is what will decide your financial future.